Canada and the emerging markets benefited hugely from the big recovery in China and the huge Chinese stimulus policies, plus those in other countries after the global financial crisis. But all that came to an end in 2013, and since then China has been slowing, Brazil and Russia have been in recession, and Canada's resource sector has been badly hit by that slowdown. Now, the Canadian policy authorities, particularly at Bank of Canada, were anticipating a recovery of the manufacturing sector in the eastern provinces, but that really hasn't been as strong as they had hoped. So Canada is still experiencing lower growth than would be typical in a recovery. As far as the emerging markets are concerned, those that have been big exporters of commodities have continued to suffer because of the Chinese slowdown, the slowdown of the big economies like Russia and Brazil. But the manufacturing emerging markets have typically tended to do rather better. Now, growth hasn't been stellar by any means, but it's been a bit better. Now, I think that that's largely due to the reasonable recovery that's been going on in the US. And I think that even though it's an election year, that gradual recovery of something like 2–2.5% growth in the US will continue. And that will have knock-on effects for those emerging markets like Mexico or the smaller East Asian economies, which are producers of manufactured goods. However, for commodities, I think the outlook is for subdued commodity prices for quite an extended period of time. I don't expect another commodity boom until we have a major surge in Chinese activity.